Hello, and welcome to a liaison meeting between the Governmental Accounting Standards Board and the AICPA State and Local Government Expert Panel. As we have a big group on my screen at least, and so it's great to see everybody. This group in particular, I always enjoy meeting with because I used to be on this group many years ago at this point probably. But I really do appreciate all of you taking time to meet with us at the GASB. I know that maybe I hesitate to say busy season because it seems like it's just always busy. There is no particular season anymore, but I do remember that at least the majority of governments are June 30s. And so this happens to be maybe a particularly busy season, at least it was for me around this time. So I appreciate you taking time out of that to meet with us and share your insights on what we have going on. So we will go through a list and have everybody introduce themselves. We'll start on the GASB side, and I'm going to go down the list of participants that we have posted, and I'll start with myself. I'm Joel Black. I'm the GASB chair, and then Jeff is next.
Hello, everyone. I am Jeff Praviti, GASB vice chair.
Jim
Brown, GASB board members, disappearing in 7 months.
Only as an official board member, otherwise still around. Brian.
I am Brian Caputo. I'm a board member.
Chris.
Chris Knight, GASB board member.
Chris. Diane.
Diane Ray, GASB board member.
Carolyn.
Carolyn Smith, GASB board member.
Alan.
Alan Skelton, good morning, Director of Research and Technical Activities.
Michelle Cherkowski.
Hi, I'm Michelle Cherkowski. I am an assistant director at GASB and the staff liaison with this esteemed group.
Paulina.
Hi, Paulina Haro, GASB staff.
Roberta.
Roberta Reese, GASB staff.
Deborah.
Deborah Beams, GASB staff.
Pam.
Hi, everyone. I'm Pam Dolan, GASB staff.
Jalan.
Hi, everyone. Jalan Su, GASB staff.
Scott.
Hello, I'm Scott Anderson, GASB practice fellow.
Janine.
Janine Hathcock. Hello, everyone. Good to see you. And I am also GASB practice fellow.
Emily.
Hi, everyone. I'm Emily Paul, and I'm a consultant for the GASB.
Unless I missed somebody, yell at me, raise your hand. I think I got everybody. Very good. All right, Michelle, I'll turn it over to you.
Yeah, great. Thanks so much, Joel, and good afternoon or good morning to everyone. We're really happy to be with you here today, and quite frankly, maybe a little bit of jealousy because we understand you guys have started meeting in person. I'm not sure if you're there in person today, but saw that last board meeting where you were all in person, and we haven't done that yet, at least not as a group. So certainly can't believe we're here for a second time joining you virtually. I don't want to make it a third time virtually, so we hope that this time next year we can certainly be in person. So we'll go around and do introductions just like you did, and I'll go right down our list as well. So first off, my name is Michelle Waterworth. I am the chair of the State and Local Government Expert Panel. I am a partner at Plant Moran. Bill.
This Bill?
Bill Bland.
Bill Bland, yeah. MSL, State and Local Government Committee member.
Tony.
Hi, I'm Tony Boris. I'm a partner with Crow LLP, and I'm part of the expert panel here.
Tracy.
Tracy Cooley. I'm the managing director at Deloitte and part of the expert panel.
Sarah.
Hi, I'm Sarah Dempsey. I'm a partner with Weaver in Tidwell and a member of the expert panel. Thank you.
Jody.
Hello, everyone. My name is Jody Dobson. I'm a member of the expert panel and a partner with Baker Tilly.
Susan.
Hello, everybody. My name is Susan Friend. I'm a member of the expert panel and I'm a director with CLA.
John.
Hi, my name is John Good. I'm a managing director with Ernst & Young and a member of the expert panel.
Michelle.
Hi, everyone. I'm Michelle Harani. I'm a partner with RSM and part of the expert panel.
Marla.
Hello, everyone. Marla Hummel, partner with Grant Thornton and a member of the expert panel.
Tim.
Hey, good afternoon, everybody. Tim Lyons with Malden and Jenkins, and I'm a member of the expert panel.
Jeff.
Hello, everyone. This is Jeff Markert. I'm a partner with KPMG in the national office.
Chris Pembroke.
Chris Pembroke. I'm a shareholder with Crawford Associates in Oklahoma City.
The other Chris.
Hi, I'm Chris Salem. I'm a director at PwC's national office.
And then Mary.
Hi, everyone. I'm Mary Foster, Senior Director at the AICPA.
And last but not least, Cheryl.
Hi, everyone. I'm Cheryl Messer, and I'm Senior Manager with the AICPA.
Anyone that I've missed? I think I got everyone who was on the call here today. Looks like we're all set.
Very good. I think we are turning it to you to start us off on some practice issues, right, Michelle?
Yes, absolutely. And I'm going to turn it over to John to talk about some new auditing standards that we wanted to just share with you very briefly this morning.
Thank you, Michelle. Good afternoon, everyone. As we discussed in our meeting last year together, the AICPA issued a suite of auditing standards comprised of SAS numbers 134 to 40, primarily but not entirely related to auditor reporting. This suite of audit standards is effective for audits of periods ending on or after December 15th of 2021. That represents an effective date that was delayed 1 year by the issuance of SAS 141. The most significant changes come from SAS 134, which will modify the form and content of the auditor's report. It's increasing its informational value, making the report more relevant. The auditor reporting requirements then under this suite of standards include several new elements and enhancements that will result in a significant expansion of the content and length of the standard auditor's report. So I'll now walk through some of the highlights of the changes in the auditor's financial statement audit report from this suite of standards. The opinion or the opinion section, if there are multiple opinion units being reported on, is presented as the first section, followed by the basis for opinion or basis for opinion section as appropriate. Presenting the opinion then at the front of the report hits the user with the punchline and adds visibility and makes the basis for the opinion more transparent. And then the titles of each of these first two sections would be modified if there were any modified opinions, such as a qualified, adverse, or disclaimer of opinion. The next section with the heading of responsibilities for management for the financial statements contains an expanded description of management's responsibilities, including a new paragraph on management's responsibilities related to the evaluation of going concern when that's required by the applicable financial reporting framework. The next section with the heading of auditors' responsibilities for the audit of the financial statements is somewhat lengthy, you'll see, with expanded descriptions with bullet points, including descriptions of key features of the audit, including a new bullet point on the auditor's responsibility related to going concern. Then SAS 137, which is one of the standards in this suite that addresses the auditor's responsibility, but not addresses the auditor's responsibilities related to other information in annual reports, including their reporting responsibilities. An example of other information might be the introductory and/or statistical sections of an annual comprehensive financial report. So to enhance transparency, the content of the auditor's report on other information under the new standard has been modified and more clearly articulates the auditor's responsibility for other information in annual reports. There's a required separate section in the auditor's report for reporting when applicable on any of the following: required supplementary information or RSI, supplementary information or SI, and other information or OI as previously mentioned. Previously, RSI, SI, and OI were paragraphs in the other matters section of the report. The 2021 AICPA State and Local Government Audit Guide, those illustrative audit reports, show placement of these three sections with the heading names of required supplementary information, and other information in that order in that illustration coming after the auditor's responsibility section of the report. Then a couple other quick points. SAS 134 also introduced a new section of the auditing standards on key audit matters, or CAMs. And then CAM reporting is only required when the client engages the auditor to do so. If included, CAM would be in a separate section entitled Key Audit Matters. And then CAM is defined as those matters in the auditor's professional judgment that were of most significance in the audit of financial statements, and they're selected from the matters that were communicated by the auditor to those charged with governance. And the purpose of communicating CAM is to provide greater transparency to the user about the audit that was performed. Finally, the AICPA website then presents a sample of 6 of the 17 audit report illustrations that are contained in the 2021 edition of the guide that was issued this past summer. And with that, I'll turn it back over to you, Michelle.
Great. Thanks so much, John. Yeah, so we just really wanted to make you aware of those changes that you'll be seeing when you look at those audited financial statements. Didn't want you to be surprised when you're looking at opinions that are very different than what you're seeing today. So, all right, we'll move on to the next topic. You know, as I reflected on what we talked about at this time last year, we were 9 months into the pandemic when we met in December of 2020. And, you know, our discussion really centered on all the challenges that we faced in having to continually pivot and extend ourselves really in ways that we didn't think possible. And at the time, I'm sure we all thought that the pace of change and the complexities that it brought would slow down in the months to come. And I think we've all seen that this year, what we've experienced is more change, continual change, and just different challenges. And this next topic really reflects that. So we wanted to spend a little bit of time with you here this afternoon talking about some of the ARPA related issues, and I will let Sarah lead that discussion.
Yes, thank you, Michelle. So in June, we started the ARPA Task Force Committee, and that really was to get us together and discuss what issues and practice questions that we have that we're seeing at the CPA firms, as well as with our governmental entities. As you can imagine, there are a lot of challenges that come with this, and we weren't sure if, you know, the GASB guidance that's there would be able to provide that support, or if we could provide that support some way as well. So what we did is we met and we went through what questions our clients had, what questions our partners had at our firms, and really talked about what are the issues that everyone is having. Some of them can be addressed in GASB guidance for sure. We found that out. You know, if we listed out all of the questions that we were getting, we were able to go back to GASB guidance. The technical bulletin on the CARES Act was analogous to a lot of our questions, as well as the concept statements for the interfund reimbursements versus an interfund transfer. We got a lot of questions of, if we put this revenue into a special revenue fund, can we just transfer it out to the fund that needs it? So that's been a lot of the questions, as well as what happens when we are putting the revenue into a special revenue fund and then need to move it to a business type activity. How do we report these revenues in our statement of activities to make sure that we're matching it up with the program? So we've seen a lot of revenue recognition related questions, a lot of reporting questions, as well as the timing of when we can put it on the schedule of expenditures of federal awards. So those have been a lot of them. The lost revenue calculation was of particular interest to the group at the beginning because the guidance from the Department of Treasury was very broad. It almost sounded like once you did the calculation, it could be used for anything, but there were eligibility requirements within there. So we could see where there could be a practice issue where someone received the money, did their lost revenue calculation, reported it, and maybe they wanted to recognize that revenue right away. And so we did talk about the eligibility of expenditures, the timing, and those are really a lot of the issues that we saw. We met with GASB on August 30th, a few members, and just talked through some of the issues that we had seen up until then. And at that time, a lot of questions had not come into GASB. There's still other, leases, and GASB 84 were coming in probably a lot more frequently than ARPA and CARES Act money. So at this time, we were wondering if there had been any more questions that had come in and what you're seeing versus what we're seeing. But that's really what we wanted to update on with you today.
Hi, Sarah and everyone. I think what you just said is very reflective. The whole issue of interfund transfers has been a story starting back to CRF monies. It's really where it started. We have not seen an awful lot of change in that direction. We are seeing the exact same issue with the loss of revenue. A lot of people keep calling with the exact same question. So can we just compute and put it on day one? And it's sometimes people going even further from, the local governments get 2 tranches and get the first money up front. They want to book the entire amount as lost revenue. So they want to have a receivable for the amount that they haven't received. So it's a little bit of the nuance on the flavor. We keep telling them, hey, there's an expenditure component to it. You got to talk through your auditors, see how you're going to feel comfortable making assertion of compliance with the second aspect of the grant program. And it's not just a pure loss of revenue calculation. So a lot of conversation around that. People then tend to get very uncomfortable very quickly. And then they start pivoting into, can we start using instead programmatic for capital projects? Say, hey, this is a management decision, go do you make your planning, whatever. So we've seen a lot of people flipping very quickly from loss of revenue to let's think about better how to do this in the other side, because they're still, even if you do through the loss of revenue, you have reporting requirements for 4 years to prove, the loss of revenue issue. So people get very overwhelmed very quickly and start changing topics. We have seen a little bit of HERF, which is some of the conversations we've had before. The timing of HERF and is there a management discretion to revenue recognition? I think we've had this conversation before. And other than those 2 topics, there has been some questions about, well, the implementation guide in 2020, the technical bulletin apply only to coronavirus relief fund. Can we make this purpose restrictions? No, by analogy, it also extends. We've had all these conversations. So not an awful lot more than those kinds of topics are coming in. A little more frequent questions, yes, but pretty much in the same vein that you were just pointing out.
Okay,
Great.
thank you. And Michelle, did you want to follow up on that? That's what we were expecting. We weren't sure if there were more questions, though. Thank you.
Yeah, no, appreciate that update, Paulina, and certainly appreciate your willingness. I know we've had multiple discussions with multiple people on various topics related to ARPA, so certainly appreciate all your help, and appreciate you're also reaching out too when you're seeing things that you think we should be aware of. So that two-way conversation is helpful.
Of course.
All right, the next topic we wanted to touch on relates to GASB 87, and I'll just let Chris take it away.
Hi, everybody. First, I got to say, I can't believe we're actually here in the year of implementation of GASB 87. It seems like forever ago. I mean, I had hair before we got to this point, so you can kind of see what the standards kind of done to me. I didn't want to, kind of looking over what we've discussed before in previous meetings, we're still seeing, at least from my perspective and the questions I'm getting directly, are a lot of questions still around the same topics. But what's nice here in this time frame we've had from the issuance of the standard to where we are today, we've had a lot of implementation guide Q&As, both in the standalone and the subsequent updates to the implementation guide, where we're able to at least now reference and get our clients to kind of look at some areas where some guidance exists. So very appreciative of that. We still see definitional questions, term and term evaluations. I do want to reference down to the Omnibus project and what it could be doing as far as some of the clarification terms. I've got some really smart governments that are fine-tooth combing the standard, trying to find, I don't want to say a way out, but they want to make sure they're in line with the standard. And some of those clarifications on what a termination option is that's in that Omnibus project really helps, because I think, you know, inherently that was there in the standard, but it makes it really clear with that particular project coming down the line. Probably the next area where our governments, for those that have really been working on putting together that completeness of that inventory, and what we're focusing on now is with the subsequent standards, both with the P3s and the subscription-based IT arrangements, 94, 96, is how to handle that transitionally, where we have some governments that are maybe a little more proactive in early implementation. I think that's an easier transition for those folks because there is guidance in both of those standards where you're dealing with a contractor agreement that kind of meet both definitions, whether we're looking at the P3s, the non-SCA components, or we're talking about the IT side of things. So working through them is probably where, working through that issue is probably where a lot of our questions have been for those governments that are kind of maybe ahead of the curve a little bit and begin working on it. For ours that are now, as Joel mentioned, finishing up the 630s, where that was a big prime focus. Now knowing they have to focus on leases, we're getting a lot of the same questions about definition term, the interest rate, and how to come up with that rate, since many of our agreements we're finding don't state that. But there's a lot of guidance there. I'm sure Deborah is probably getting a lot of questions. So kind of the same way with the, the ARPA related funds. Always curious to hear what you're receiving. Sometimes being the auditor, you want to ask the auditor for forgiveness later sometimes. So we're always curious to hear what you may be receiving directly.
Yeah, well, certainly we've been getting a lot of questions about leases. The last statistics I had were, as of the end of September, we had 129 technical inquiries for the year on leases, which was more than any other topic that we'd had so far, and they keep coming. A lot of those questions that come in do end up making their way into the implementation guides. I like to say a lot of those questions that end up, especially in these subsequent guides, updates have been inspired by a true story, because many of them are from questions that have come in. So it's good that we're getting those. I find it interesting, you said you're still getting a lot of definitional type questions. I would say those have really dropped off as far as what's been coming in here. I was hoping that meant people were moving beyond the definition and getting farther along in their implementation. Maybe some people aren't that far along, but that has not been as common of a question as it was maybe about 2 years ago of, does this contract meet the definition of a lease? Is this in scope? Probably the biggest kind of area I've been getting questions lately are very transition specific questions. One area being operating leases, and you may not have a restatement at the beginning net position if that's all you had before, and that throws some people off because they think they should have some kind of restatement, but they may not always. And the other one is kind of an interesting situation, and there's been different variations on this, but it's typically coming from governments that are presenting prior periods and having to go back and restate. And they say, well, at the beginning of that prior period, this is what, say, this index or rate was. This is what we thought was going to be reasonably certain as far as renewals or cancellation options, or various factors. And then now looking back, we have the benefit of hindsight of knowing what actually happened. So which way do we do this when we're trying to measure our beginning thing for that prior year? So a lot of specific transition questions is probably the most common thing I'm getting right now.
That's great to hear. We're getting a lot of those, and I know I got Jody on here and Jeff on here. I know we've been talking about those transitional issues and a lot of the training we're doing, and we've had some upcoming training that we're going to be doing through the GAQC, and we'll make sure that we at least reiterate some of that there as well. So thank you.
Great. Thanks, Chris and Deborah. All right, we're moving right on. I'm going to turn it over to Jeff to talk about the codification.
All right, where to start with the codification? So I know we have talked in the past about, the future of standard setting for the GASB and various alternatives to the original pronouncements in the authoritative literature. And we just wanted to kind of bring it back to the forefront here and really think, is there a better way going forward, given the maturity of the standards, I'd say, from the GASB perspective, and the number of times that they have been amended, that are we now really at the point where we should start thinking about some sort of authoritative codification? And I know that's a lot to say, and there's a lot on the plate of the board and especially project staff. But, you know, at some point there never is a good time, and it's a question about, you know, an investment of resources. So we certainly recognize what we're suggesting, but so we're just wanted to hear your thoughts, if there's been, you know, any discussion or thought about a project, and, you know, how that might work going forward. I know we'd like to, or at least offer up us as resources, you know, would be happy to be part of roundtables, discussions, and other, you know, vehicles to communicate our thoughts on, you know, potentials. And I know there's a lot to think about when you go down this path, and including the organization and the styles and all of the like. And so I guess I'll pause right there and just open it up to you.
Thanks, Jeff. You know, I think that, you know, we have had these conversations with this group in particular in the past. This issue has come up, and in various other forums and contexts. You know, I think that it comes up sometimes in even some of the comment letters we get, where they're commenting on sort of the way we're presenting COD instructions, and some of the, you know, as we get into really complex areas, and challenges that all of our stakeholders may be experiencing in different forms, with the parallel authoritative guidance that we do have. As you know, we don't currently have a project on our active technical agenda, on our research agenda. It is something that comes up periodically for, you know, that we do think about. And we think about it in other contexts as well. Even within the current structures that we have, how can we better communicate the effects of changes? So something, you know, less significant than a wholesale revamping of our authoritative structures. So we do think about it on a number of levels. If we do ever decide to undertake a project, I think it would be first kind of a research effort, as you alluded to, where it would involve a great deal of stakeholder outreach, discussions, trying to understand what challenges, if any, our stakeholders are having right now. Also trying to take some of the experience into account of our sister organization as they made a transition from a structure similar to ours to a single source in their ASC. So I don't really have too much in terms of a prospective path on this. This isn't something that the board has discussed formally, and we currently don't have a plan to take something to the board in terms of a proposal, but that's not to say that it's not something that's on our radar and that we're thinking about as issues are raised. So we always appreciate feedback from this group and from others. So if there are specific things that you want for us to understand as we sort of consider this potentially going forward, you know, definitely, you know, keep the lines of communication open, because we're very open to hearing feedback on this topic.
No, that's great, Michelle. And yeah, it was more food for thought. And as we hear back from our members and the challenges of working with the OP, it takes, you know, somebody that's trained in hand-to-hand combat to piece together the reporting entity literature and some of the other ones that have been modified, you know, 8 or 9 times. And so definitely might help going forward for the users.
All right, great. Thank you, Jeff and Michelle. We wanted to move on to the next section, just giving you some feedback on Some of the due process documents, I think we've submitted letters on or comment letters on all of these, but maybe wanted to provide a little bit more context where necessary. We have spent a tremendous amount of time this year creating various task forces to address and respond to these due process documents. So you'll hear primarily from the chairs of these various task forces as we cover each of the topics here today. So with that, we'll start our next topic, which is compensated absences, and I'll turn it over to Tony.
Thank you, Michelle. And as you indicated, we'd love to just recap some of the points we brought up in our letter that we did submit. We appreciate you receiving those comments and considering them during your deliberations. We'd also love to hear any status updates on the project and other concerns that might have come out through subsequent deliberations and so forth. And maybe there's some points within that we can comment on and provide some of our feedback on today as well. So starting off with compensated absences, as our letter indicated, we're supporting the efforts of the board to enhance the recognition and measurement guidance for all types of compensated absences under one unified model. It's been a long time since GASB Statement 16, and we've gone a long way from just having vacation and sick time. Now we have all sorts of what we might consider PTO time, and different entities consider that a different way. So just having one model to apply to all those situations would be extremely beneficial for consistency within the government, and then also comparability with other governments and between governments. So just to highlight real high level some of our comments that we provide in the letter, and we do know that many of our concerns have been addressed in subsequent deliberations by the board, and we appreciate the board taking our comments under consideration. One of the points we brought up in our letter was just to clarify some of the definitions of terms used throughout the proposal. For instance, paid or settled through other means. Specifically the latter one regarding settled through other means, we just appreciate some clarity, maybe some examples on what exactly would fall into that category or that definition. Another point we brought up is just if pay was paid out during an employee's employment rather than upon termination, how would that handle? And we know the board has subsequently deliberated that topic and modified their definition related to that. Another main point we had was concerns about the treatment of defined contribution pension or Opeb liabilities associated with compensated absences. And while we agree that definitely is a liability, we had some concerns with the classification, classifying them as a pension or Opeb liability rather than a compensated absences seemed problematic and non-appropriate characterization of the nature of the liability. We felt that until due, those payments should remain as a compensated absences liability. And I believe through the subsequent deliberation, that was a topic discussed by the board and GASB staff as well. And the final point we brought up was just some additional guidance needed on accumulation. We appreciated the illustration regarding parental military leave found in the proposal. However, we felt that more guidance needed to be included within the standard itself to clarify when those types of leave would be recorded and when. And I believe that topic has also been deliberated by the board, which we truly appreciate as well. So again, we want to thank the board and staff for considering our comments, including our feedback and party deliberations to the proposed changes, to the proposals in the exposure draft, and definitely would like to turn it over to Deborah at this point if there's any other updates on the project or questions that she has for the committee.
Yeah, thank you. And certainly we appreciate your feedback as always. As you mentioned, I think all of the points you mentioned have been deliberated by the board. We are looking to clarify terms, particularly you mentioned paid versus settled, and clarifying paid means cash and settled means something other than cash, as well as some of the other terms that were needed, some explanation in the standard. As far as the defined contribution pension and Opeb salary related payments, the board did discuss that and has decided that those would remain part of the compensated absences liability. They would still be recognized as pension or Opeb expense, but the liability would be in the compensated absences rather than pension or Opeb liability, which was what had been proposed in the exposure draft. We've also, on the topic of the accumulation and those certain other types of leave with different, having some extra stuff in the standard, not just the illustration about that. The board has discussed that, making some clarifying changes. Part of that has been the board wanting to have some specific exceptions to the accumulation criteria, or the three recognition criteria, one of which being accumulation. One of those exceptions being that leave that is sporadic and affects only a small proportion of employees, such as often parental leave or military leave, is just going to be specifically accepted from those from the recognition criteria, and just gets recognized at the point that that leave commences. So that's one thing we're looking at there. And I think those are the main changes from the exposure draft that the board has tentatively decided on in its redeliberations thus far.
Thank you, Deborah, for that update. Really appreciate that. And again, thank you for taking our comments under consideration. Michelle, anything else further to add regarding compensated absences?
No, not for me. And I know you got the next one on the agenda. So why don't you go ahead, Tony, and talk about accounting changes and error corrections?
Sure. So moving on to the next topic, we know this topic is not as further along as far as the deliberations go. And we just submitted our letter, I think, back in August. And again, we support the board's efforts to enhance the accounting and reporting requirements for accounting changes and error corrections. You know, while these changes aren't necessarily as common as compensated absences, when we do come across, prior period adjustments and changes in accounting policies and estimates, they can be fairly significant, especially when it concerns, restatements and so forth. So we definitely believe enhanced guidance surrounding this area is appreciated and needed. Again, we generally agree with the proposed guidance, but we did have a few concerns that we felt warranted be communicated to the board, and we included those in our letter. We had various comments, but there were three what we considered maybe more significant comments or concerns we wanted to communicate. One of those was regarding measurement methodology and that being a change in accounting estimate. We just weren't exactly sure as a task force and as a committee, what the situation and what would exactly fall in this category. So we were hoping to provide some more examples or just a further clarity on how to apply this as a change in accounting estimate. Our second concern was related to changes in major fund presentation, where you're going from a major to non-major fund or vice versa. We felt that this change in a reporting entity shouldn't necessarily be subject to the same display and footnote disclosure requirements as other changes in a reporting entity. Specifically, if you're changing a major fund or non-major fund strictly based on a quantitative calculation found, in GASB 34, we felt that displaying that as a change in reporting entity might make it seem more substantive to the reader than another type of change. So we felt that should not be included as part of that change. Other comment we had was other financial reporting requirements as a display in the financial statements. We felt that the line on the face of the financial statements aggregating the changes shouldn't necessarily be warranted, as the footnote would have the breakdown of all those changes in detail, which could then be, with that total then being tied back to the restated beginning net position or fund balance on the face of the statements. Our letter also had a few other additional comments, some of those being providing clarification on the term significant as applied to a change in accounting estimate. Now, obviously, we're not asking the board to define significant, but we would like some perspective on how to apply that term, whether it should be applied to the entity as a whole or just to the impacted change specifically that it's affecting. Also clarifying disclosures related to information presented in the RSI and SI sections when required for the proposal, where those disclosures should be located, whether they should be located within the RSI or SI, somewhere else, perhaps the footnotes and so forth. And finally, removal of the tabular format disclosure requirement. While we discussed that as our task force, and most of us do prefer that approach, and a lot of our clients take that approach, we felt that requiring a tabular format shouldn't be required, as some of the changes could be very straightforward and minor and singular, where a full table should not be required. So again, we appreciate the board and staff taking our comments under consideration. And I believe, Emily, if there's anything else that you can provide information regarding this topic, we'd appreciate it.
Trying to unmute myself. Sorry there. Thank you so much for your comments on this. We are not as far along as the compensated absences project. So actually later this afternoon, the board will be redeliberating for the first time the issues on this project. So today's board discussion will focus on the 4 major categories, and several of the issues that you raised will be discussed by the board today. Specifically those related to the measurement methodology and what that constitutes. The staff is aware that, you know, the ED was a little bit of a shift in approach with the change in estimate category. The ED defined an accounting estimate as an output that's determined based on inputs that include the measurement methodology as an input. So the board will be redeliberating that approach, as well as considering whether examples should be provided in a final statement to better articulate what a measurement methodology is. Also, with respect to the change in accounting estimates, the board will be deliberating today the use of the term significant and when the disclosure should be made. So what was the intent of that phrase? So that's part of today's deliberations as well. Also today, we'll be talking about the change in fund presentation and what note disclosures should be made for changes in reporting entity and specifically for changes in fund presentation. The board will be deliberating the display and tabular format of the disclosures, as well as RSI and SI requirements at a future meeting. So all of these things are a little bit interrelated, so sometimes it's hard to separate them, but today the board will be focusing on the categories themselves and the requirements with respect to the categories, and then at a future meeting we'll be talking about display, the format of that quantitative effect disclosure should the board decide to carry that forward, as well as RSI and SI proposals. So I can't provide where the board has landed because we haven't discussed that yet, but that's what's on deck.
You're definitely making us all want to listen to these deliberations to hear the answer. I know, what a great cliffhanger.
Like a trailer for the board meeting.
Thank you very much, Emily. Michelle, I wasn't sure if there's anything else to add to this.
Yeah, no, perfect. We'll definitely be tuning in and paying close attention there, Emily. Appreciate it.
Thank you so much.
All right, so the next item on our agenda is just a very brief comment on the Omnibus. We, the expert panel, really in our letter from September of 2021 expressed overall support of many of the provisions in the ED. A couple of things we really appreciated as part of that is the alignment of non-exchange financial guarantees from Statement 70 with the new provisions for exchange and exchange-like financial guarantees in the exposure draft. And we were also very supportive of the consistency in the guidance in this document with leases, PPPs, and SPIDAs. Our review based on our task force really only identified one significant comment, and that related to revenue recognition guidance for the consideration received by a guarantor government. And I know that the board did debate this topic before they released that revised ED, and certainly do appreciate that you again discussed this concept at your meeting just a few weeks ago. So appreciate your reconsideration of that. And as I understand it, based on that discussion at that most recent board meeting, we do look forward to seeing the expanded discussion and the basis for conclusion as to the reasons why the board decided not to address that specific question at that time. Our other two comments that we had on the Omnibus were extremely minor, essentially just two very small clarifications in the text of the standard. So again, overall, very supportive of this exposure draft, and appreciate your willingness to reconsider the revenue recognition guidance.
I don't know, was there a question that I needed to address here? We appreciate your comments as well, and your letter, and all three of your comments we have taken to heart and we'll be addressing.
Appreciate that, Scott. The last item here that we have in this section relates to the conceptual framework. So essentially the revised exposure draft on the disclosure framework. So again, here we did form a task force to provide input on this project. And pleased to say that we were overall very supportive of the 3 characteristics that were identified related to that revised concept of essentiality. Just a couple of reasons for our support. We do believe that those revised characteristics provide clearer and more consistent guidance, and believe that those additional characteristics related to meaningful effect and breadth and depth of users, it really supports our belief that the information to be useful should play a meaningful role in users analysis and be used either by a diverse set of users or a substantial group of users. So overall, we were, again, very supportive of that revised definition of essentiality. We feel it will appropriately focus the note disclosures and minimize those note disclosures that provide really little or no benefit to users to the financial statements.
Thank you, Michelle. Just a quick update. The board has not yet begun redeliberating the proposed concepts, but we really appreciate so much your feedback, and we'll, be incorporating that into our analysis as part of those redeliberations that are set to begin in January. So stay tuned, and you'll see, and hopefully we'll all see how this ends up and move us forward to a final concept statement later next year. So thank you.
Perfect. Thanks so much, Pam. Joel, I think I'm going to turn the remaining section over to you for the GASB project updates.
Yeah, thanks so much for all your input through the comment letters, and then as kind of summarized here today on our exposure drafts. And so we are going to move into updating you on several of our projects, and I will return it over to Roberta to start us off with the reporting model and recognition framework.
Okay, thank you, Joel. Yes, we have actually been making quite a bit of progress in this project, so I do have quite a bit to share with you about what the board's been doing related to this project. Last time, as you know, we were in the early in the extended due process phase of these 2 projects, the financial reporting model and the conceptual framework. We did hold, let's see, I could let you know that we did receive a substantial number of comment letters on these projects. Some people presented a letter that addressed both, and some did unique letters for each one, but we had a total of 309 letters. So that's pretty substantial. Some were form letters, as in it was the same letter presented just with a different name on it. There was 134 of those, but it's still a substantial amount of feedback in the way of comment letters. We also had 8 public hearings, and we know that your group participated in the hearings with us. We appreciate that. We had a total of 45 testifiers at the hearings. And in addition to that, we held 2 user forums, and we got feedback on the proposals from 18 different individuals at those user forums. So we have a good volume of feedback for the board to consider as they go through all of the issues that were in these 2 proposed documents. So let me just go into, and I'm going to highlight the things that based on your letter, that your group was most interested in or concerned about the proposals. I'll make sure that those are well addressed as we go through this. So the board decided to take up all of the issues related to recognition in governmental funds first. That's kind of fundamental to determining what the overall time frame of the project is that was the biggest unknown, and it's probably still a little bit of unknown what the total is. But anyhow, so that was the reason in taking that up first. As with other times when the board has talked about these issues, the first step is the proposed approach. Let's say stakeholders have presented other general approaches rather than the one the board has proposed. So it'd be taking and going in a different direction. So we always consider those first before we start dealing with the details of what the proposed approach is. So these are things like, should governmental funds, some suggested that they not be part of basic statements, that they be presented on a budgetary basis, that they be presented on the economic resources and accrual basis of accounting. And finally, some suggested that we stay with using what we call current financial resources and modified accrual, but just make some more smaller tweaks to that. The board considered these other approaches, but did want to continue with a conceptual approach that was proposed in the exposure drafts. So that would be the short-term financial resources measurement focus. The board confirmed they still believe that's the appropriate way to describe the measurement focus. What they did change is that in the documents, it was described as being associated with the accrual basis of accounting. The board took the feedback that was received that some people were confused by that and have agreed that they will use the label modified accrual basis of accounting going forward with the short-term financial resources. The three major features, and we're going to get into one that was a particular concern for your group. The three major features of the short-term financial resources and now modified accrual basis of accounting are the recognition terms, method, and period. And is the recognition terms was proposed to use the terms of the binding arrangement. The board talked about that. It wasn't an easy decision for the board. I know that your group was advocating, had some strong concerns about that with the ability of governments to establish particular terms and binding arrangements that would have a particular outcome that they were looking for in their financial statements. And we were advocating going to the use of what is normal for governments, which has been brought up in previous due process documents. It wasn't an easy decision, but the board did decide to go ahead with using the terms of the binding arrangement. But there is a subsequent change to reduce concerns with the ability of an entity to use specific terms to create a specific outcome. And I'll get to that just a little bit later, but it wasn't that we didn't hear, the board didn't hear concerns about that. The board and board members shared those concerns as well. So they wanted to do a mechanism to address that concern. Going back to the other recognition major features of the short-term financial resources measurement focus and modified accrual basis accounting, the recognition method, the board confirmed what was proposed, which is to use the inception date as part of the critical factor in determining recognition, so that they're looking out from the inception date to see whether a transaction is a short-term transaction or a long-term transaction, with the short-term transactions getting a different recognition than the long-term transactions. Short-term transactions would be recognized when they occur, and long-term transactions would be recognized when payments are due. And the recognition period would continue to be the 1 year that was proposed in the exposure drafts. So those are the kind of the three big things. And then there's some other associated features of the method that the board talked about. One is confirming what financial assets are, as in those that would be recognized in the financials, in the governmental fund financial statements. The board continues to believe that its proposed definition is correct, but there is a little different aspect of the application of it, that when it's described what type of things would be recognized, I think we had a blanket statement saying something, things like inventory and prepaids would be recognized as financial assets. The board, in thinking more about the transactions and getting feedback about things such as like bond insurance, where it's a much longer term prepaid type item, that the board is going to be using more limiting language associated with prepaids, like certain prepaids, so that be clear that prepaids, yes, if they're short-term prepaid, would be recognized in governmental funds, but there's more to it. It's not just a blanket statement that all prepaids would be considered financial assets in the short-term financial resources. Okay, couple other things I wanted to mention before I get to the exception. They confirmed this idea of applicability to the period. So that's a concept that is used when the board is determining whether something should be recognized as an inflow of resources or an outflow of resources versus a deferred inflow of resources or a deferred outflow of resources. And the proposal in the ED was to use the concept of interperiod equity, just as with economic resources, measurement, focus, and accrual basis accounting. And the board did confirm that tentative decision. The board's, okay, so getting into the exceptions, you know that in the financial reporting model, ED itself, it implemented the concepts for the short-term financial resources measurement focus using an exception. So it was an exception for long-term debt issued for short-term purposes. So the board has expanded that exception. Now, the proposal was to use debt specifically, and using that definition of debt that was in statement 88, the disclosures for debt, the board decided to expand that to encompass more types of things. So it's now generally financings in general. So it's any circumstance where government is required to make payments that extend beyond 1 year from the inception of the transaction to finance a fixed amount for a short-term purpose. And they would include more examples of what these circumstances might be in a final document. The idea with that is that more things would fall into that if it's just a financing that's pretty broad. What the board is continuing to work on is this idea of short-term purpose. It was brought up that the board wanted, it was proposed in the ED. It was, I get, a somewhat conceptual thing, short-term purpose. We didn't have a specific definition for it. We did have feedback that people wanted to know more about that. The board has been working on that. They've had a discussion on it. They've reached a tentative, some of these words seem to fit, but there's still not a complete agreement on how specific it should be. And the board's going to talk at future meetings. We're going to bring back some other ideas of their other options to be used. But what the board talked about, and again, they weren't completely satisfied with it, was short-term purpose would be obtaining a good or service within the short-term time frame, 1 year. But there's the whole number of items that the board has talked about is, would this one fall in or not fall into the category, and trying to get it, getting the right balance of amount of detail versus just calling out all the things that would fall into this category. So the board has a little more work to do with that. But I can say I went back and looked at the, in your letter, you had included a couple of examples for us of circumstances that it was believed would not fit in the exception as proposed in the exposure draft. And as I looked at what the board's been thinking about now, I think those exceptions would fall within this new broader exception. So we'll be looking for your feedback on how you think about that, what you think about that, and whether that alleviates your concerns. Let's see, there's a couple more things that I wanted to mention that the board's made a decision on. I'm not going to go down to every little detail. Now, if you want to know everything there is to know about a sheet property or irrevocable split interest agreements, we spend a lot of time on that. I'd be happy to tell you about that. Just if we have extra time, just let me know. One change that I don't think we received a tremendous amount of feedback on it, but there was enough feedback for us to think about it, is this idea of, we had a statement in there about the binding arrangement that if there were modifications to the binding arrangement, that the recognition would not change. But if a new binding arrangement was entered into, the new binding arrangement, of course, would be what's recognized. The board talked about that idea again and as to trying to change their mind on that with the idea that they believe recognition should always follow what the current terms of the binding arrangement are. So if those terms change, and then there would be some change to recognition terms, as in the terms change it from being a short-term transaction to a long-term transaction or vice versa. Okay, what other ones did I want to bring up to you? There was a little bit of an expansion related to, well, okay, first of all, there was some confirmation related to investments. So there was some, we tried to make it clear in the exposure, or at least the financial reporting model exposure draft, that investments are financial assets. They're short-term financial assets that would be reported in governmental funds. There's no exception for certain types of investment. So the board looked at that again to make sure they're comfortable with that. They looked about things like land that's being held as an investment. So if it meets the definition of an investment, it would be reported as an asset in a governmental fund. And there are certain types of investments that aren't reported at fair value, but yet they're still investments. There's another way of measuring the amount that they're reported at. Those would continue to be reported in governmental funds and not excluded. Another thing the board talked about was this idea of non-spendable fund balance. One of the things, if you read those codification instructions in great detail, you would have discovered what changes were actually made to the requirements related to fund balance classifications. There was an idea initially in the project that if governmental funds generally focus on spending and flows and balances related to spending, that we would no longer be recognizing things that weren't spendable. So you wouldn't have this category of non-spendable fund balance. As it turned out, even prior to the issuance of the ED, we did identify a couple of items that were non-spendable, having to do with interfund balances. If there's interfund loans, specifically, those amounts, if they're loans, meaning they're being paid over time, that's clearly not a spendable amount in the fund that has the loan balance. So that was identified specifically as a type of thing that would be reported as non-spendable fund balance, but also the corpus of a permanent fund, as in that portion that is being held and can't be spent, that only the earnings on it can be spent. The board had specifically talked about how permanent funds worked in governmental funds and decided that it still needed to report the entire asset, but it would be appropriate to report non-spendable fund balance for that. So, those two things were specifically identified. The board has encountered in these discussions some other things that may or may not, in different circumstances, and a government may consider non-spendable. One thing that was talked about is receivables that aren't collected by their due dates, as in we talk about it's the ones that are recognized or the short-term transactions or even the long terms when the due date comes up. But what happens if that balance isn't paid by the due date? There may be circumstances where governments have amounts that they believe would affect the amounts available for spending and might be appropriate to report as non-spendable fund balance. Something of maybe a government that has particular challenges collecting its property taxes, not whether it ever collects the property taxes, because clearly receivables should be net of uncollectible balances, but if they're just going to be slow to collect them because of the mechanics they have to go through, the legal process to collect those balances, then it could be non-spendable. But again, it's not something we believe a lot of governments would encounter. But the board did think that it was appropriate to go back to the guidance we had before, with the idea that non-spendable fund balance would be described in the codification as more amounts not in spendable form, with just some examples, versus what we had proposed, which was limiting it to just these two items. Okay, and then guess the other thing I would mention is related to governmental funds. We know that that your group, along with others, encouraged us to provide additional examples and illustrations of transactions and more specifics about the thought process behind in assessing whether things are short-term or long-term. So that is something that the board is going to be talking about in December. We're working up a more expanded, illustrative set of transactions with more detailed guidance about the thought process, going through the idea of taking a look at a transaction and all the things you think about to get down to the specifics of what items are being recognized when. So we have that. Okay, other things that were, other topics have not yet been considered. And I know that, you know, one of the things that was a big concern or, you know, very more significant recommendation was to consider this project along with the revenue and expense project as far as the timing and coordination because of the amount of changes that would be associated with that. That is something that the board hasn't talked about yet. It's on the board's radar that this is something that's going to have to be talked about. I think at least from the perspective of this project, the financial reporting model project, we feel like we need to get down the road on what recognition in governmental funds, what the final standard should be before we talk about timing. Because as I've mentioned, we've made a couple of significant changes. We need to, at some point, once we finally have what we think is a final model, talk about the idea is, was there anything in here or the collection of things that would make it so significant we would want to get feedback on it again, because that would certainly change the timeline. But if it goes forward in a way that the board believes that the changes aren't that significant and it wouldn't need to get additional feedback on, then that means something different. But I think it's important to understand what the changes to the timelines of the projects would be and the ways of connecting them. So again, that's something that's still on the board's radar and board will certainly be talking about, just haven't gotten to that part yet. And likewise with all of the other topics other than governmental funds in the financial reporting model exposure draft, the board has not, they're scheduled to start talking about more things in future board meetings, but you know, we still have all of the feedback that will be presented to them as they're making decisions about those. So I'd be happy to hear your thoughts on any of these tentative decisions. or if you have questions about anything else, I'd be happy to answer your questions.
Thank you, Roberta. We really do appreciate all of the efforts of the board and the staff. We know that this was a very heavy lift, very significant project amongst a lot of other ones that you've been busy dealing with. So we really wanted to recognize that and thank you for your effort. And also really appreciate the fact that you jumped right into dealing with the feedback and the comments around the governmental fund financial statements and those items within that measurement focus and basis of accounting. So thank you for that. We haven't had an opportunity to really discuss as a group the tentative decisions reached. But Roberta, you did a great job of walking through each of those for us. So I know that we'll get together and have discussions around that and appreciate your feedback on that. And we really also appreciate hearing that while you might not have discussed yet the idea of marrying this project with maybe the revenue and expense recognition project because of the nature of the two projects, that it's still on your radar and certainly can appreciate wanting to get through some of the other areas before you're able to really think through that and discuss that as a board and staff. So thank you for that. We very much appreciate it.
Thanks, Roberta and Michelle. We will move on to revenue and expense recognition. Paulina.
Thank you. Good afternoon. I think the revenue and expense recognition project has followed a slightly different path. We have been trying to diagnose and digest all the field test results that we had. As you were aware, we run 2 different series of field tests to facilitate people with different fiscal year ends. We receive a very significant number of responses. And with that, it gave us an opportunity to a little bit put in context a lot of the feedback of the stakeholders that have been coming in comment letters and testimony as well. So I think one of the things that I would share with you today, some of those highlights in the context of some of the comments that were made, because I think is relevant and interesting to see it from that perspective. So we receive, as you know, a lot of people had concerns about the categorization methodology. Do we need to follow this change and things of that nature? And what we've observed in the field test results was that people were combining certain steps. So very much top of mind, the consideration of, does the binding arrangement belongs in categorization or in classification, given that it doesn't have the most operable step, and all we were trying to do is remove fraud, which was the comment letter feedback. And then it translated very much in people combining the binding arrangement with mutual assent. And so in the mutual assent, we also saw very frequently people trying to determine the type of binding arrangement. So it kind of, went back and forth together. In terms of rights and obligations and substantiveness, people were not slowing down and looking at one and then the interdependence later, but looking at the substantiveness and interdependence combined. So if those kinds of steps are naturally feeling comfortable to prepare to look at it from that point of view, obviously there's an opportunity for us to look a little bit further and see what can be done with that. Obviously, top of mind, the issue of grants. We have discussed for a very long time the issue, and no surprisingly, it also shows up in the field test results in some of the challenging areas. In terms of what we saw for the recognition, one of the things that I think several stakeholders commented in comment letters was this issue of, do we need to have expenses in the model? And I think a lot of the feedback had an awful lot to do with the size and the magnitude of the project. Can we do that later? And it was really interesting because the results in the field test, given that we did them for expenses as well, it was the people experience a lot less challenges on the expense side that they did on the revenue side. And so I found that really intriguing because people were very easy to identify distinct goods and services, and they were able to identify the methodology a little bit better. So it was a lot more natural to them. And the revenue side, we continue to go back to what we know, which is kind of expected, I think, from a huge perspective. So we were looking at things, if you were dealing with category A transaction revenues, people were still gravitating with exchange take place. And so that felt like, there was still a lot of opportunity to learn and reinforce the things that we were trying to do with that aspect. And the other aspect that we looked at is we also saw an awful lot of the feedback in the field test was very operational in nature. So, how in the revenue and expense model, we pivoted to the asset and liability. So if you were looking at a revenue transaction, we always were focused on the receivable. And once you resolve the receivable, the credit kind of went along with it. So liability, deferral, or revenue, people keep going to the revenue side. And so it's a very natural tendency that we see from existing standards. Similarly, in the expense side, we started with when we have a liability and people keep going to the expense side. And so we saw those kind of operational, interesting thoughts that were coming through. So in general, like I said, it was a very substantive set of field test results. And I think it's very complementary to what we're hearing in the comment letters. And so give us an opportunity to think about what and how can these issues be improved. At the moment, the board began deliberations with regards to the path forward of the project, and it has not made any tentative decisions about what to do with categorization. So the proposal was essentially, can we first start and consider all these issues that we're seeing, both from comment letters as well as the field test results? Can we repair the categorization to a place where it makes it a little bit easier or simplified, and then make a tentative decision on what the board would like to pursue from that standpoint? The second topic that was discussed had to do with scope. A lot of also really helpful feedback on scope, particularly around capital assets, and they're excluded, but you still have examples of revenue recognition and grants. Well, some transactions cannot be completely excluded. I mean, we don't want to do capitalization. We do not want to do depreciation. We can do impairment. But there are aspects of the capital asset model that we can ignore, which one of them is grant transactions, right? So if we have a grant that is given for capital purposes, we cannot ignore the grant aspect of the transaction. And so the opportunity to clarify all these issues, hopefully in a subsequent due process, and explain how these things work. The board spent a good amount of time trying to think about what Joel ended up calling them the circles of recognition. So every recognition model follows essentially a slightly different circle. And so some of these things overlap. Capital assets tend to be one of them. Some of them are not even related: investments, derivatives, financial instruments. And so trying to hone into what is the universe of things we're trying to deal, and providing essentially a rationale, which I think is what was missing in the preliminary review, is an explanation of why certain transactions were excluded. And if they were not completely included or excluded, what is the rationale behind them? So the board has discussed those scope topics, and then we also have an educational session with regards to executory contracts, a topic that is going to be very foundational throughout the project. And essentially, that's the stage in which we are right now. There has not been an awful lot of tentative decisions. Starting in January, we plan to start discussing issues with regards to the binding arrangement and the potential role between the binding arrangement and the mutual assent, and how to deal with those issues. So very short update. Do you have any questions?
Sorry about that. I had to unmute myself. I was having challenges there. So first and foremost, Paulina, we want to thank you profusely for all your help over this past year with all of our calls on revenue recognition. You really have been amazing and provided some great insight and thought on some challenging issues. And we hope that this crazy year or year and a half or 2 years that we've all seen all these unusual grant terms will help, stress test the model, as you might say. And I think we've seen it all. That's for sure. I hope we've seen it all.
I'm afraid, Jeff, there's always going to be something else. But like you said, definitely, it has been a huge, huge eye opener. I think we've discussed this particularly with grants. Yep. In the areas that, we issued the PV right at the onset of the pandemic, and then having this just shaking you to the ground. It's been a very interesting experience.
Yes. And as far as what you said, it was interesting. I honestly don't remember any significant problems we had, Michelle, with the scope of the project. So it was interesting to see, some of all the other feedback that you were alluding to. Certainly understanding the whys behind it might help, but we didn't really see any issues there. But we certainly look forward to the journey and walking along with you, because you can see the timeline. It's well laid out in your agenda. Almost every topic is coming back up for reconsideration. So we'll be excited to hear where everything goes, and any help we can give and providing feedback, we'd love to do that. And just please feel free to reach out to us at any time. So
very appreciated. And don't say that out loud. I will call you.
All right. Well, we're happy to do it. And I don't think there's anything else much to say from our side, given where we're at and where you're at from the reconsideration. You're really at the infancy point of this. So we'll just wait and look forward to everything to come.
Thank you.
Thanks, Pauline and Jeff. And then we will move into one of our newer projects, the Risks and Uncertainties Disclosure Project, which hasn't had a due process document out yet, but we will ask Janine to update you on that project.
Thank you, Joel. It's good to see everyone. Today, I'm going to start with a little bit of background on our project. Just as a reminder, since it has been nearly a year since we saw you last, and this project was in its infancy. So we've done a lot this past year. So then I will provide you with some progress that we've made over the year. But the objective of the project is to identify some potential risks and uncertainties in the state and local government environment, and then consider disclosure requirements associated with those risks and uncertainties. Now, if you remember, our project did begin by using GASB's topic 275 as our baseline. And then general disclosure guidance in topic 275 requires a non-governmental entity to disclose risks and uncertainties related to three broad categories. Now, because of the differences between the public and the private sector environments, the board concluded that each of those categories needed to be carefully considered in the context of the governmental environment. So in order to inform that consideration, project staff conducted research, which consisted of a review of existing guidance of other standard setters and other relevant literature. And then we began with some interviews with 38 users of governmental financial statements about what information they currently use and what information they would use if it became available related to risks and uncertainties that governments face. So now moving into what we've accomplished since our last meeting, the board has tentatively established the scope of our project. And in doing so, the board considered two potential approaches. So the first approach would be to define the scope broadly by developing a general description or a definition of risks and uncertainties, as well as a description of certain limitations. Now, the second approach considered by the board would focus more narrowly on risks and uncertainties disclosures in this project by prescribing specific categories, which would further be refined by limitations. So the board tentatively decided that the broader approach had some challenges related to costs, reliability, and relevance, and it had a potential to be overly subjective and provide less comprehensive information. So the board believes that the scope of the project should be more prescriptive with certain defined categories. So we went out and we did a second user outreach and conducted 51 interviews with users, which resulted in the board tentatively deciding on two categories of disclosure. Our first category would be a category called current vulnerability due to certain concentrations. And it would be described as a risk to the government resulting from a current condition that creates a lack of diversity related to a significant revenue source or a lack of flexibility in managing a significant expense. This category description the board has tentatively decided would be accompanied by some examples. So some examples, they're not limited to, but these sort of conditions would be like principal concentrations of principal employers or principal industries, principal resource providers, and a few others. Now, our second category that the board has tentatively decided upon is a current condition that is common in the government environment. And the board has tentatively decided that to describe this as a risk to the government resulting from a current condition that's common in the government environment, but it's not necessarily limited to governments. But it constrains the government's ability to acquire resources or control spending. And also, similar to the previous category, the board has decided on a few examples to include, which would be restrictions on raising revenue, spending restrictions, an inflexibility in managing expenses, such as like an unfunded mandate. And the board has tentatively decided that a government should disclose in its notes to financial statements information about a risk of a certain concentration or government environment if 4 criteria are met. So all of these would have to be true. Information about the current condition is known by management of the government prior to the issuance of the financial statements. It is at least reasonably possible that an event associated with that current condition would occur within 12 months of the financial statement date or shortly thereafter, for example, an additional 3 months. It is at least reasonably possible that the event will have a substantial effect on the government's ability to continue to provide services at the level of the current reporting period or meet its obligations as they come due. And then finally, the substantial effect of that current event would occur within 2 to 3 years of the financial statement date. So if all of those criteria are met, the board has tentatively decided that a government should disclose the following 2 items in the notes. First will be a nature of the risk to which the government is exposed. And then second, any actions that were taken prior to the issuance of the financial statements to address the risk or its effect, as long as those actions do not result in the disclosure criteria no longer being met. The board has also decided that these disclosures generally should be made for the primary government, including its blended component units. Now, based on our last board meeting, our next steps going forward in this project is to further refine what would be required to be in the disclosure. And currently, we are hoping to have an exposure draft sometime in 2022.
Thanks, Janine. So I know you have not seen any exposure draft or anything like that on this project. So I don't know if you have any comments at this point in time, but if not, then we will just move on to the next project. So but we look forward to getting an exposure draft out to you on this, what I think is an important project, and getting your feedback then.
I will say, I was just going to say, Joel, just going back a number of years, the expert panel has always been supportive of just this general notion of addressing this. So we're very anxious to get our hands on the ED, and we'll certainly faithfully respond.
Great, thank you. The next project we wanted to update you on is one that is even not as far along as this one, as it is not yet a technical agenda project, but is a research project that we have concluded and the board will be hearing about later today, as well as them potentially hearing about taking up a project on this or deciding whether or not to at our next meeting in December. So with that, I'll ask Jalan to update you on the results of our research on ongoing concern.
Thank you, Joel, and good afternoon, everyone. And when I was looking at the agenda of the meeting, I noticed that the first item from AICPA update for us was about the auditing standards routine. And then when I heard John talking about the first item, just some of the auditor's responsibility about evaluating government's going concern uncertainties. And I thought, I wonder if by design or a coincidence, the update for the going concern pre-general research is the last item. So with that said, I know that some of you might have known this for a while, how the history of the pre-general research and such, but I do want to give all the members just like a reminder of the history of this pre-agenda research. and also some of the key preliminary assessment based on our pre-agenda research findings, and lastly about our next step, as Joe has mentioned. So for the first piece, the history of the pre-agenda research dated back to the issuance of GASB Statement 56. As many of you know, that Statement 56 incorporated into the GASB standards the going concern consideration guidance, which were previously presented in the AICPA's Auditing Standards. And the board has subsequently discussed with this state and local government expert panel about the inconsistencies in practice in the application of that guidance. And I said it dated back when Statement 56, and as a reminder, Statement 56 was issued in March of 2009. So the second piece that was related to the history was the staff discussion at GASB with the AICPA's auditing issues task force back then. The staff has discussed with the task force about their task force concerns, whether there is a gap between the information that financial statement users was looking at when they analyzed the going concern uncertainty disclosures in the prepared financial statement and the actual user's information needs regarding, for example, government exposures to the severe financial stress. So as a result of those discussions with the AICPA's two groups, in April of 2015, the board approved a pre-agenda research to re-examine the going concern disclosure guidance and to provide the board with information regarding two aspects. The first aspect is to provide information to help the board to evaluate whether the existing literature has provided preparers sufficient guidance for them to understand the management responsibility to evaluate and to disclose uncertainties associated with severe financial stress. And the second part is to provide information to the board for the board to consider whether there is a need for revision to the existing standards with the intention to reduce the inconsistency in the disclosure and also to more effectively meet the user needs. So with those intentions, during the past 6 years of the research team has conducted various research activities. Those activities include the following. The first one is a literature review of accounting standards from various standard setting bodies, and also literature review of a large body of research from academic and research communities. And the second activity is interviews with representatives of a sample of state fiscal monitoring programs. And the third activity is a survey of financial statement users. And the fourth activity is case study analysis for a sample of governments that filed bankruptcy or defaulted on bond payments. And in addition to the staff conducted research activities, we also have supplemented this work with 4 studies that funded by GASB's CREAM grants. The first 2 related to studies to provide the staff with background information. One study focused on the study of the frequency of and reasons for going concern opinions that occurred in the financial statements. And the second one focused on the frequency of and causes of government dissolutions. The dissolutions include mergers, consolidations, and dissolutions without any further arrangements. And the other 2 CREAM grant funded studies are statistical analysis. Each one of them were trying to analyze using statistical data and models the researcher established to find out the predictive capacity and also the practicality trying to decide practicality or practicability, the two words, of the commonly used indicators for government exposures to severe financial stress. So we've done a lot of that, and all those research activities concluded in the August of this year. And since then, the staff has presented the research findings and results to the board in an October's meeting. So now let's look at the second part of my update, which is our key preliminary assessments based on the research findings. And there's three big pieces I want to give you this brief update. First piece is about the academic research we have noted from the research. As I mentioned before, we have reviewed over the past 6 years a huge number of studies that's done from not only the research community, the organizations, in some of the citizen and policy research institutions, and also by some practitioners, individual academia and such. And by looking at those studies, we find out is that researchers have done a lot of work to develop models and indicators that help identify financial condition and financial stress of the state and local governments. But the researchers also do not agree with the usefulness or the effectiveness of any of the indicators or models, that they would basically do not agree what indicators would really best indicate the government's financial condition or their financial stress, or which government would fully encompass that function to help people identify the government's financial condition or financial stress. However, there are some common themes that emerge from some of the studies. For example, they use different words to describe it: stress, financial stress, severe financial stress. So that indicates there's a common basic understanding of what that means. It is very difficult to pinpoint and to describe that condition in a very consistent way. And the second piece of the research finding is that some of the key issues we identified in this research. The first one is that we noticed the existing guidance is not sufficiently clear for preparers or auditors to understand what it means for a government to cease being a going concern, or for the preparers of government to reach a consistent conclusion as to whether information should be disclosed regarding going concern uncertainties. And the second piece we noted about the issues is basically a discovery about the concepts of going concern uncertainties. We noticed that through all the activities, research activities, we noted this concept of going concern uncertainties seems to have limited relevance to state and local governments, which translated into limited applicability to the going concern disclosure guidance. And the third key issue we identified is that because we know that there is no current guidance about disclosure of government's severe financial stress. So in the absence of that guidance, it is not clear to preparers or auditors to understand whether and when governments have a responsibility to evaluate and to disclose the government's exposures to severe financial stress. So those are the three key issues that we identified from the research. And lastly, about the user needs, because we mentioned that we have the survey to number of financial statement users. So for the user needs, from that perspective, we noted that nearly half of the user respondents to the user survey told us that they have used or evaluated the information in the financial statement that contain going concern disclosures. And in general, those user respondents believe those disclosures are helpful and valuable for them in their decision-making process. And the second piece we found out from the user outreach is that nearly all the user respondents were interested in relevant information to help them identify and understand the government's exposures to severe financial stress. So those are the key preliminary assessments based on the research findings. As I mentioned earlier that the board had obtained these information from the research activities in October. And then the next step is at the December board meeting that the board will consider whether a new project will be added to its current technical agenda and what would be the main issues that should be addressed in this new project. So that concludes my update about this pre-agenda research activity on re-examination of Statement 56, ongoing concern disclosure guidance. And I'm happy to answer questions from anyone. Thank you.
Jalon, this is Jeff Markert. I guess I'm still trying to process everything you just said. There was a lot, a lot in that research, and I know we had written the paper, several years ago, trying to introduce this as a topic of consideration, and just a couple quick reactions, and I don't want to go too far because I'll be curious to hear where this goes at the December meeting. I think the impetus of us bringing this up to the board partly was to your very point. Very rarely does going concern happen in the same way in a government, right? And most governments, at least general purpose governments, aren't going to go away. They still have a mandate to do something, except for in some very, very extreme cases. And so our concern was the nomenclature going concern. Was that really what we were trying to capture? Or are there other things that we're trying to capture to disclose? And I know we didn't want to go down the indicators approach because we can imagine all the pitfalls of indicators and all of the research that's happened, over time on can we develop reliable indicators. And I really have gotten to the point where that's a real tough hill to climb. And wouldn't have been the path I would have wanted to go down in life for this. So as I think about it, is there something else? Is it nomenclature? Is it something else, right? What is it that we're trying to do to capture something other than the FASB, term of going concern in the government world? Is it changing the name? Is it other risks that we want to think about, liquidity risks, definitional or whatever? And that seems to be one of the main focuses that we want to focus on. Is there going to be do we have any issues or significant concerns about their ability to meet their obligations as they come due? And is that mean the same thing as going concern, or is that something else? Or is there a risk of other things happening that they have to, in the near term, very near term, reduce services? And I know that wasn't very popular with David Bean at the time when we threw that idea there too, but we thought that at least that was something of concern that readers might need to know. So I guess I'll just stop there and just say we're very interested, to see where this goes. And we'll just wait to hear the discussions.
Yeah, absolutely, Jeff. I appreciate you sharing those thoughts with us. And I will respond to some of the comments here. The first thing about the indicator path is something where, as I mentioned, we have reviewed a very large body of the literature that focused on indicators and models and such. And that's where we learned, and that we reported back earlier, as I mentioned, that even among the researchers community themselves, they do not agree on what models worked. Otherwise, I think there are probably more than one Nobel Prize winners out there on this topic. But so far, we haven't seen that happening. That just shows everybody has an idea what is the best one, but it's really there's really no consensus on. So we know the pitfalls of going down that path to try to come up with some sort of indicators or models. And I also mentioned that we even used 2 Crane grants to fund 2 of our own studies that conducted by the external researchers, but focusing on, can we find some different models that could work better? And as I said, this leads to our observation is really there's no best model, and there's not going to be models everyone agrees that's the best indicator and such. And even though we haven't presented or even shared board with the paper, it's it's implied in our research findings as an observation of looking at all that. So the team or the research staff share that observation with you. And the second thing you mentioned the nomenclature about the concept, going concern uncertainties, how that concept fits so perfectly well in the for-profit world when describe the business, because they do have liquidation basis of accounting, which does not exist in the government world, right? We know that we do not have liquidation based accounting and such. So how does that concept being interpreted in the state and local government community? That's something, we find out that we mentioned the concept of going concern uncertainties in our research findings. We noted this limited relevance to them. We noted that we think there's that relevance translated into this limited application of the guidance, because people don't know or people aren't sure what does it mean for the government to cease being a going concern. The government has to provide services, even if they go through dissolution. Like in some of the study, we find out there are laws and regulations that require the government to find alternatives to continue to provide services to the citizens. So how is that going to be some sort of a conditional criteria to make the preparers and auditors to arrive at the same conclusion? Hey, when this happens, you need to disclose going concern uncertainty. So that's where some of the challenges we found out from the research project. And I would say that I'm excited to hear that you're excited to tune into the December meeting, as the board is going to discuss with the staff of our proposed path forward, and to have a robust discussion on whether all the elements are aligned there, where they can help them make the decision whether to take a project or not. I guess I'll have a spoiler alert that in the same week of the GASB meeting, we have a GASB meeting the first couple of days. So the GASB members get to see a draft version without any staff recommendation about this, what we call a paper called Project Perspectives, basically listing all the things out there for the GASB member to discuss. And then the board will sit with the GASB members so they can listen to their firsthand the feedback from the GASB members on this topic. And then later on in that same week, the board will look at the board version of that paper, which will include the staff recommendation and analysis and recommendation on the same topic. So
Jeff, it's fair to say that this is going to be an interesting path, an interesting journey, and it's going to be very interesting to see where it goes and where it ends up. So I think we're all kind of looking forward to that. I did say, and you mentioned it, that we are going to do the prospectus in December. This afternoon we're talking about an interim financial report, research report, and we'll get to both the interim financial report prospectus and this going concern perspective in December. So the December meeting is going to be interesting for both those two projects to decide where they go from there. But the going concern one is going to be a very interesting journey, Jeff.
Yeah, and it seems it has some nexus to the risks and uncertainties disclosures as well, depending on how you look at it. And
I don't know what the board decides.
We were always, just as to reframe it, we were always down the risk approach here, the most significant financial risks, whatever that translated to when we were thinking disclosure as well. So
fair point. Joe, I think you and Michelle had closing comments before we.
Sounds good. And so I appreciate Jalan very eloquently pointing out the misspeaking that I made in leading into her comments without calling me out, because I said we were talking about the research later today on this project when we in fact already did talk about this research back in October. On the October 11th meeting, if you want to go watch the webcast recording of, you can hear Jalan's presentation to us of that research. Later today is interim financial reporting. So I got my research projects mixed up, but that's okay. We will talk about both of them in December. So, if you didn't already have a trailer teaser to want to tune in for the board meeting that is after this on accounting changes, now interim financial reporting research will be talked about after accounting changes. So we look forward to that. But thank you all for your participation today. I really do appreciate it. And as an extra thank you for your participation on GASAC. So Kevin Smith, who is your GASAC representative, the AICPA's GASAC representative, he will have that paper that Alan just talked about. He doesn't have it already. He will have it very soon so that you can get that preview that Alan talked about. So I know that Kevin shares that with the expert panel to get help in providing his input at the GASAC meeting. So thank you for your work in supporting the GASAC and for just bringing all these issues to us at this meeting and throughout the year. The practice issues you bring are really valuable. You see quite the array of different clients. Each of you represents a number of different clients, number of different governments, and you have the perspective of not only auditing, but knowing what those entities have to do to take their day-to-day accounting records and put them into a GAAP basis financial statement. So your perspectives are always appreciated. Thank you very much.
Hey, Joel, just a follow-up. Kevin would have gotten that from us last week. So he should have it. It should be posted out there.
Very good.
Perfect. We definitely look forward to reading that paper. And again, just certainly appreciate the opportunity, not only today, but throughout the year to both formally and informally engage in discussions with all of you. And, we certainly appreciate that our phone calls don't always come at the most convenient time. So thank you for picking up the phone when we call. And again, we really do appreciate when you also reach out to us when there are issues that you see that we should be aware of that perhaps we're not understanding the magnitude. So we encourage you to call us as well. And I promise we'll pick up the phone when you call too. So with that, I wish everyone a happy Thanksgiving and thank you again.
Thanks, everybody.